Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Andrew Noble, partner at Par Equity, to talk about their EIS fund. Hello, Andrew.
Hi, Alex.
First off, tell me about the fund. What does it aim to do for investors?
So ultimately, our Par EIS Fund has three goals for our investor base. The first, and most importantly, we aim to make significant capital gains for our investors over a 5 to 7 year period, whilst allowing the investor to take advantage of EIS tax relief. Second of all, we aim to deploy an investor's money across 8 companies over a 12-month period. And finally, by being based in Edinburgh and investing across Scotland, Northern England and Northern Ireland, we aim to deploy the investor's money in the north, which allows an investor to achieve portfolio diversification away from some more sort of saturated investment markets in the south.
And can you tell me a bit about Par, who they are, and your own experience?
Fantastic. So Par Equity are what I would describe as an established, growth-focused EIS fund manager with a proven track record. We have a team of 15, 10 of which are focused on our core investment activities. We have a wider investor network of 200 members who have a broad range of experience and are actively involved in our proprietary deal flow and our portfolio management. We're a very hands-on investor. And finally, in terms of our track record, well, we've been investing since 2009. We've invested across 57 companies. We've made 18 realizations to date, from which we've returned 3.3 times money and a 27% IRR to our investor base.
And what's your own background and experience in investing?
So I've got a range of experience spanning management consulting, private equity and venture capital. I've also been investing in EIS qualifying companies since 2007. So I've got a good feel for assessing and understanding an early stage business. However, what's particularly brilliant about Par's model is that we can tap into a wider network of individuals who can add a broad range of expertise to what we're doing. And they're able to pull in deal flow and also portfolio management and exit management to our expertise.
What are they? These are your group of angel investors?
These are a group of active, engaged angel investors who often take a stake in the business, but will also roll up their sleeves to help out and help solve problems in the company.
So typically entrepreneurs, etc.
Typically cashed out entrepreneurs who've been successful, or even middle management in technology companies who have some extra cash that they want to invest in interesting businesses that we have in our portfolio.
Talk to me about the types of company you invest in.
So we look for scalable technology companies with quality management teams, and we do prefer second and third time entrepreneurs because they have that experience of growing companies and taking them to successful outcomes. We look across software and hardware technology. We do like B2B technologies, principally because they are more affordable and they require less capital to get to break even. We typically focus on the end of the market where we're investing in pre-Series A and Series A rounds. What that typically means is that we're looking at companies that are perhaps in monthly turnover of 20 to 200,000 and are looking for an investment of between £500,000 and £2 million. And finally, I think being based in Edinburgh, we do have a regional bias. So we are looking mostly at companies based in North of England, Scotland and Northern Ireland.
Andrew, can you give me some examples of recent investments you've made?
Of course. So we've made 2 recent investments into companies that we're particularly excited about, Current Health and also Speech Graphics. Current Health is an Edinburgh-based medtech business which has developed a wearable device to measure a patient's vital signs remotely. As a result, patients can be discharged from hospitals earlier and monitored in the comfort of their own homes. At the same time, the healthcare professional receives automatic alerts on updates on the patient's vital signs and is alerted if anything is deteriorating in the patient's health, meaning that we can, or the company can, have faster intervention into the patient's health and also delivering better patient outcomes. Now, bringing this type of technology to market is quite difficult with a number of regulatory hurdles to overcome. But so far, Current Health have been selling into a number of NHS trusts and are also now selling the product into several large US private hospitals. We invested at an early stage into Current Health, and so far we've committed £4 million to the business, and we're very excited about its future. The second example is Speech Graphics, which is a facial animation software tool. They're able to provide their customers with the ability to for real-time lip sync and facial animation, and they sell into the games industry and also for online chat box. Now, as you can imagine, it's very hard to do this in real time, so the technology is patented and very demonstratable. We've so far invested £500,000 into this business, and we're continuing to support it for its exciting growth plans.
And how involved do you get in the businesses that you invest in?
So we are a very hands-on investor base, and we can do that through the experience of our investment team, but we can also do it through leveraging our 200-strong investor network. We always take board positions on our companies, and we use that to monitor the investment progress and add input and advice into the companies. But if things are not going to plan, we're not shy about making changes in the structure of the team or the board to ensure better outcomes for our investors.
What are the challenges you have as a fund manager? Is it hard to get deals? Are you competing against lots of other people?
I think being based up in Edinburgh and with a network of 200 members, as I've described before, we are able to pull in a proprietary deal flow which many of our competitors in the south don't normally see. And I think this is a key USP for Par Equity. We're able to attract opportunities at better valuations, and therefore, hopefully, once we exit from those opportunities, return more money to our investors.
So you're saying you don't actually compete that much for deals with other people?
We don't need to. We don't need to. Deal flow is not a problem for us. We invest in less than 1% of the opportunities that we see, and we find that a lot of our opportunities come to us pre-screened through our network.
Of course, EIS is all about the exits. Can you talk to me about your exit track record and some of the companies you've recently exited?
Of course. So, as I've mentioned before, we've made a number of successful exits for our investors. Indeed, if we do a deep dive on our exits and we look at solely at our EIS qualifying experience since 2012 when we launched the EIS Fund, we've returned 6.3 times money to our investor base. Now, one of the successful exits that we had is Delta DNA. Delta DNA are a gaming analytics business serving the games industry. And what they're able to do is to monitor and adapt a game in real time depending on the user's interactions with the software. So as you can imagine, they enhance for freemium games. They're able to improve the retention and also the monetization of the users. We invested in Delta DNA back in 2013. We were one of the first investors into the company and followed our investment into that company 4 more times until a successful exit to Unity Technologies in September of last year for an undisclosed price, but it was a very successful outcome for our investors. The second successful exit that we've had, which also sold shortly after Delta DNA in October 2019, is Decozy. Decozy is a battery management technology tool. It aims at being able to provide efficient monitoring of lithium-ion batteries between separate cells and typically targets the electric vehicle market. We invested in Decozy in 2012, and we followed our money in multiple rounds to ensure it was well capitalized to get it to a successful outcome. It was sold to KCK, which is a private equity office in the US, as part of their buy and build strategy. And again, it was an undisclosed real price, but it was a successful outcome for our investors.
And what about failures? Have you had many, and what would you expect the failure rate to be?
Where we are in the market and our focus on early stage investment opportunities means that there's always going to be failures. Now, we've made 18 realizations, so we're nearing statistical significance in terms of our track record. 9 of the 18 have returned money to investors, and 9 have been complete write-offs, so a 50% hit rate. Now, we would say that's probably in line with industry average, but of course, our returns to investors are above industry average.
And how many companies will I invest in if I go into one of your EIS portfolios?
So if you're an investor into one of our EIS fund, we would target 8 potential companies for your investment to be spread across over the course of a 12-month period.
And finally, Andrew, I want to put some money into an EIS this year. Why should I invest with Par Equity?
Excellent. Well, very good question. And I believe there are three main reasons why an investor should seriously look at Par Equity as a place to invest their funds. The first of which is that we are an experienced EIS fund manager, having returned more than 50 million back to our investor base over the last 10 years. Second of all, we have a hybrid investment model, and that means that we can, through our investor network, unearth some really interesting opportunities at very sensible valuations compared to perhaps some of our competitors in the south. And the third reason is that we as an investment team have some serious skin in the game in what we're doing. The core investment team at Par Equity has invested nearly 3.5 million in our portfolio to date, and therefore it gives you as an investor the comfort that we are very much eating our own lunch, and we're highly motivated in ensuring that we can make some good returns for you.
Andrew Noble, Par Equity, thank you very much.
Thank you, Alex.